welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, June 1st, 2020, and I'm pre-recording this Trading Places Live for Tuesday, June 2nd. Futures currently are flat for Tuesday after a mostly bullish session on Monday. We're going to get into all that in just a minute. First, let's go through the agenda. I'm going to start off today just looking at the action from Monday. So we'll go through and do our normal daily market recap. Then we'll get into talking technically. I want to talk a little bit about the S&P 500 and the VIX. The relationship there is pretty important. It's an inverse relationship, but sometimes the two tend to go together, and I think they can give us some pretty good signals. So I want to talk about that, spend some time taking a look at that. Then we'll get into Turning Point, which is a segment that I used to do on the Market Watchers live show, just showing a number of charts, and when they reach certain areas of the charts, when you can anticipate that they're going to make a turn back in the other direction. So I've got a number of charts I want to show you there. We'll get into earnings spotlight. Got a couple big earnings reports coming up later this week. Couple of companies that have done well as a result of the pandemic, and it's going to be very interesting to see how the market reacts to their numbers, because I think their numbers are going to be good, but has it already been priced in? I think that's the real question. And then we'll wrap up the show with 3 you must see. A few interesting charts, probably 3 that you haven't heard of before. Well, maybe a couple of them you haven't heard of, but we'll get into that at the end of the show. All right, before we get into the daily market recap, I do just want to point everybody to earningsbeats.com. Again, I am the Chief Market Strategist at Earnings Beats, and I do write a free Earnings Beats Digest newsletter Mondays, Wednesdays, and Fridays. Normally goes out before the market opens. If you go to earningsbeats.com and simply type in your name and email address here, hit the subscribe button. We'll make sure that starting on Wednesday morning, we'll get the Earnings Beats Digest out to you. Usually it's focused on earnings, relative strength, accumulation distribution, and sometimes just talks a little bit about our service, some of the things that we do at Earnings Beats. But I think you'll find it very helpful and extremely educational. All right, let's take a look at what happened on Monday. Overall, it was pretty good action. I mean, the Dow Jones Industrial Average up 91 points, so we are staying above that 25,000 level. S&P 500 rose 11 points, so about the same percentage as the Dow. A little bit better, though, on a relative basis was the NASDAQ, which gained about 2/3 of 1%. Closed above 95.50, and we're not that far from setting an all-time high on the NASDAQ. Pretty impressive. Mid-caps, small caps, they got a ways to go to set an all-time high, but they did outperform, which was good. We did see a little more than 1% gain on the S&P 400 mid-cap index on Monday. Small caps were up just a little under 1%, but all of our major indices now are above our 20-day. Our 20 days above our 50-day, and both the 20 and the 50-day on all of these charts are pointing higher. Look at the PPO on every one of these charts now. The PPO is above the center line and strengthening. That is a signal that momentum is extremely bullish right now. I would be looking for any pullbacks to hold that rising 20-day moving average, at least in the near term. If things start to change, we'll take a look at it, but for now, I would remain extremely bullish. As far as sectors go on Monday, real estate, energy, utilities, communication services, financials, those are your 5 leaders. The only 2 groups that were down on Monday, technology and healthcare. Healthcare was the worst performer. And these are the 2 groups that have been leading the market in 2020. So I think it's okay. We get a little bit of rotation. We saw this at the beginning of last week, and then both healthcare and technology roared back. Later in the week, maybe we get a repeat, who knows? But right now, I think overall, the entire market is looking pretty bullish. And when we see groups like real estate, which had not been performing well, moving up, threatening to make a big breakout above recent highs, the highs that we saw back in April, I think that's bullish. Energy still needs a little bit more of a lift, but a move through about 40, 41 would be very bullish there. Utilities trying to make a breakout. Communication services have already been strong, and financials, after making a breakout above the double top in April, pulled back a little bit, but we saw some renewed strength on Monday, so that was good. And again, technology, healthcare, your 2 laggards. Not anything on the schedule on Tuesday in terms of economic reports, nothing major. But Wednesday, we have the ADP employment report coming out. Thursday, of course, initial jobless claims, and then Friday, non-farm payrolls. So we got a lot of things going on with payrolls over the next few days. And that normally drives not only the stock market, but also the bond market. So we're going to be watching this really closely. Currently, the 10-year Treasury yield is just trending sideways. Basically, it's not trending. It's consolidating. I think since we saw this gap down back in mid-April from about 0.75%, you can see we've not been able to take that out to the upside, and to the downside, we've got that low in at about 0.55%. So I think right now the 10-year Treasury yield is just going sideways. And the thing that's really encouraging to me is that the S&P 500, which has been going up for the last couple of months, is not being fueled higher by money rotating out of bonds. That money has not been coming out of bonds yet. So if you're looking for a catalyst to drive the stock market a lot higher, it's going to be when more significant rotation takes place out of the treasuries. And that would result in yields rising. When treasury prices go down, yields rise. So watch for that. If we get this breakout on the 10-year treasury yield above about 0.75 to 0.80% to break to a multi-month high, I think that could coincide with a much bigger move in the S&P 500 to the upside. And it also could coincide with the NASDAQ setting an all-time high. So something to certainly watch throughout the balance of this week with those employment reports coming up. All right, let's move on. How about talking technically? I mentioned the S&P 500 and the VIX. So what's going on here? Well, the normal relationship between these two is an inverse relationship. So when you see the S&P 500 going up, like we did back in June and July of 2019, you can see the VIX was drifting lower. And then when the market goes through a period where we drop, where the S&P 500 falls, you can see the VIX rises. And if you look throughout this chart, it's basically that inverse relationship all the time, just repeat, rinse and repeat, rinse and repeat. And the reason for that is the market gets nervous when the S&P 500 or when U.S. equities are dropping. That's when market gets more fearful. When the market gets more fearful and you start having bigger swings in terms of market action, then the options get priced higher. And options being priced higher is what drives the pricing of the volatility index. So it's based primarily on short-term S&P options. And so when the S&P starts to weaken, we tend to see more impulsive moves where there's much bigger moves, big gap ups, big gap downs, big intraday swings. And when you start seeing that, options are priced much more expensively. And when they're priced more expensively, the VIX goes up. So that's why we've got this inverse relationship. Now, the reason I mention this is that occasionally these two will go hand in hand. So I'm going back here over the last few years, and I'm taking a look at the S&P 500 on the top and correlation down here on the bottom, which is showing the S&P 500 versus the volatility index. Now, normally you can see that this, and by the way, correlation is, you can see that it goes from +1 here at the top to -1. +1 means that whatever you're comparing tends to move positively, in positive correlation together. When you see -1 readings, that means they tend to go in opposite directions. Well, I think it's pretty clear that when we look at this chart over the last few years, that we spend a lot of time down near -1. We don't spend any time at +1. In fact, we spend very little time above 0. Now, anything above 0 would begin to indicate positive correlation, very slight positive correlation when you're just above 0. But as you get further and further above 0, then the correlation, that positive correlation, gets stronger. Now, we just talked about how the S&P and the VIX tend to move opposite one another, and we saw that visually. But it doesn't always, they don't always move opposite one another. And when they do move together, if the S&P 500 is going higher, but the VIX is also going higher, it's telling us that the market is moving higher, the S&P is moving higher, U.S. equities are moving higher with fear building. So think of the VIX in terms of fear. So all of a sudden, the market starts getting a little bit nervous when we're going higher, and that can be something to deal with, an issue that we need to confront, maybe even become a little bit more cautious in our trading. So these vertical red dotted lines indicate where the correlation hits zero and we start to break above. So over the last 3 years, there have only been 6 of these instances and only 2 in the past 2.5 years. But they have either coincided with a top or they've come pretty close to a top on multiple occasions. So I think it's worth taking a look here at what has happened in the past. So if we look back into 2017, we didn't go down a lot, but we certainly didn't go up after we saw this correlation move above zero back, and this would have been in June of 2017, all the way into the first week or so of July. So I'm going to say maybe for about 4 or 5 weeks after we hit that zero line, the market didn't go anywhere further to the upside. Remember, end of 2016 through the beginning of 2018, this was one of the best periods of the market. So here, when we got to zero, you can see we struggled for a few weeks. In August, we also went back up above zero, and look what happened over the course of the next 3 to 4 weeks, mostly lower. Not a lot, but just 1 or 2%, just a little bit of a pullback. Now, this one I don't think worked as well. This was mid-October of 2017. We had a little bit of chop back and forth, but it looks to me like we still had a little bias to the upside. Then in January of 2018, it didn't mark the exact top, but when the market started getting nervous as we went up, and by the way, the high that was set was the highest of the last 3 years in terms of positive correlation. And that top coincided almost exactly with the top in the S&P in January 2018. So when you're riding this move to the upside and you see that there's positive correlation with the VIX and that the VIX is getting more nervous, I think that's time to maybe batten down the hatches a little bit. Keep your stops in place, maybe keep them very tight, and don't be afraid to build up some cash. I mean, if you're wrong, the VIX comes back down and the price of the S&P doesn't come back down, you can always get back into positions. But if you're making money, you want to make sure you protect it to the downside. And I think the correlation here, when that VIX and the S&P both are moving up at the same time, I think it's worth noting and paying attention to. Then we got to May of 2019, and you can see almost right at the top, right before the trade war escalated and everything, market was getting nervous, and that coincided almost perfectly with that drop that ensued over the next 3 to 4 weeks. Pretty big pullback here on the S&P, and so we got a little bit of a warning for that. Then in January 2020, you can see that we once again moved into positive territory, just barely. But we did so when the S&P was near 3,300. It didn't exactly mark the top right at that moment, but I think that it did at least warn us that the market was starting to get a little bit more nervous. And we saw that volatility pick back up again in January and into the latter part of February especially, and throughout March. All that's history at this point. But there was at least a little bit of a warning sign telling us we needed to be a little bit nervous there. So keep the VIX in mind. That's a chart that I would be taking a look at from time to time. I don't know that you need to look at it every day, but I would say every few days, certainly once a week, maybe take a look at. Again, it doesn't happen often, and usually, we don't just go shooting straight up in one day with this positive correlation. Normally, it's something that builds over the course of a couple weeks. So again, if you take a look, maybe just check it out once every few days to a week or so. I think that would be time well spent. All right, let's move on. And now I want to move into turning point. So with turning point, again, this is taking a look at charts, trying to anticipate what is going to happen with a stock before it actually does it, before it actually does what you think it's going to do. So when I look at a stock like JB Hunt here, JBHT, I mean, I could look back into mid-January of 2020, and you see how we got up over 120 there? Could never get a close over 120 over here. That would be a potential turning point for me. Now, we're in an uptrend, so I do normally expect in an uptrend that we're going to take out resistance before we take out support. But in this case, we failed to get through, and eventually we broke this triple bottom, excuse me, and that led to a lot more selling. And of course, that was throughout the entire pandemic there. But JBHT, check out what just happened here last week. We went back up above that 120 level again, trying to break out to an all-time high, or at least to a 52-week high. We failed, and we are starting to roll back over again. As a short-term trader, I think this is really important. As a long-term trader, or maybe as a long-term buy and hold, these types of turning points are just, it's just a hiccup. No big deal. I'm still bullish the chart. I think we're going to eventually break out. So from a long-term perspective, I'd say don't pay any attention. Doesn't matter. Short-term, though, if you can get out of a stock at 120 and it pulls back into this gap support zone, you can get in 10% cheaper. I would do that every single time. I mean, I'm not trying to make money and then lose money and then make money and then lose money. I'm trying to make money, put it away. And when I get another opportunity to go long, do the same thing, rinse and repeat. So that's the importance of these turning points, is from a short-term trading perspective, looking back, seeing where that key area of resistance is. And when you hit it, don't be afraid to take some profits. Doesn't mean you have to take your whole position off the table, but maybe you take half, a quarter, 3/4, whatever. And if it keeps going up, you still got some. If it comes back down, you've raised some cash and you'll be able to buy more shares on that pullback. So JBHT was one I wanted to look at. How about Sherwin-Williams, SHW? Check out the tops. Once again, this one's just below 600. Last Friday, we got up right to almost 600 again. And then right on cue, we saw some selling kicking in on Monday. So Sherwin-Williams, another one. How about Northrop Grumman, NOC? Now this one, you might look and say, well, it didn't reach any prior highs. I don't really see anything here. But it's not just price highs. It can also be trend lines. So when you're taking a look at a stock like Northrop Grumman, keep in mind that, we're trying to see if we can get this breakout right here above these two tops, that one and this one. We gapped up above it. It looked like we had it. And then we reversed and came back down and closed below it. So now what I would end up doing is just maybe adjusting this a little bit, because I really want to pay attention to where we open that day now. But that's the trend line that I would follow now. So after failing to make this breakout, you can see we ended up going back down. That, again, that can be a turning point, a trend line. Anthem. Let's get out of here first. All right, so Anthem, A-N-T-H. Or no, sorry, that is Anthera. Anthem is A-N-T-M. All right, so Anthem, moving up. Here was a high over at about the 296 area, trying to get through that, so far failing. I would watch the 20-day. I actually like the stock. I think everything on the chart looks pretty good, but it's just being rebuffed at some key resistance in the short term. Now, if it gets through about 296, then I think we got a shot to maybe go up here and test this 310 area. And I think eventually, not only we're going to get there, I'm looking for a breakout. Chubb, CB. This isn't 52-week high, but this is a reaction high. So off of that, all that selling back in March, you can see the furthest we could get was back up to about that 125 area. Well, if we annotate and take a look at that 125 area, you will see that on Thursday of last week, that's exactly where we got to. Also, when we gapped down back here in mid-March, the reaction was up to about that 125 area as well. So this is a pretty key area. I would love to see the breakout here. I think that could lead to some more gains in Chubb. But in the meanwhile, I'm respecting this resistance. And on a pullback, I would be looking for that rising 20-day moving average to hold. Next up, and I've talked about this one quite a bit recently, this is Wynn Resorts. And this is WYNN. I think it's pretty clear to me we got to get through $90. We've had a couple good days off the 20-day moving average last Friday and on Monday, but we need to get a close above $90. Until that happens, I'd be a little skeptical, but I do believe it's going to happen. UHS, Universal Health Services. Once again, you can see these reaction highs, 110, 112, something like that. We need to make a definitive breakout. So far, we've been struggling at that level. Look at that bearish engulfing candle printing right at the top. That, there's no guarantee, but when I see that, I would certainly be looking for a short-term move to the downside. We've seen that. Look to see if that rising 20-day moving average holds. If it does, and we can go back up and get the breakout, that would really be bullish and would begin to argue for higher prices here on UHS. BSX, this is Boston Scientific. Once again, I think you look across here, reaction high at about 38.50. Same thing, double top here, April, early May. And now we're right up about near that 38 level. Came down a little bit today, got back down to 37.50, but our high was 38.18. We're trying to get through, but this is an area where I would expect a turning point. All right, just a couple more here. How about RTX? This is Raytheon Technologies. Look at all of the, you've got some gap resistance here, tops just above 67.5, opened on Thursday up around 68 and change, maybe close to 69, but couldn't hold it, came back down, and we're moving back down toward that rising 20-day. That's where I would look for support. Last one I have for you on turning point is Roper Technologies. Once again, look back to the 52-week high, which was back in February, just above 390. That's where we got. I love the volume trends here. I love the PPO. I like everything about this chart, but we're hitting resistance. So if we pull back, that rising 20-day moving average looks really solid to me if we were to get back down there. All right, let's keep moving. We got earnings spotlight. And we've got a few earnings reports out this week that I think really bear watching. The first one and the biggest one of the week, in my opinion, is Zoom Video Communications. I do own the stock, just full disclosure. I think they're going to come out with a blowout report. Is it already priced in? That's the question I have for Zoom. That's the question I have for Slack Technologies, which is ticker symbol WORK. That's the same question I have for DocuSign, DOCU, for Ciena, for MongoDB, MDB. All of these stocks, the charts I'm about to show you, these companies are all showing that we're going to have a good report. The question is the report when it comes out, has it already been built in? You could certainly argue that with Zoom. I mean, we've had this huge move to the upside. They're going to have to come out with blowout earnings. If they come out with a disappointment, I'd be shocked. And I think most traders would be, and I think you'd probably see a pretty good sell-off. But I think the numbers will be strong here. And then the question is, will they be strong enough to continue this advance, or will we see at least a short-term pullback? That's a question I can't answer at this point. We'll all find out, though, after the bell on Tuesday when Zoom Video Communications reports. Another one that reports on Tuesday after the close is CrowdStrike. CRWD, another one, big move off this 20-day moving average, huge volume push to the upside heading into its earnings report. You would think Wall Street is looking for a pretty big number based on the way it's trading. Broadcom reports later this week. This is on Thursday. A few pretty good reports coming out on Thursday. Broadcom also trending higher, breaking out above recent highs. We're going to want to keep an eye on this one. DocuSign, as I mentioned, very strong. One of the strongest companies in software right now. I put it in to one of our portfolios. I think it's in the model. It could be in the aggressive, but I think it's in our model portfolio. But DocuSign's been incredibly strong, bouncing off that 20-day, moving to new highs. Check out the volume coming in. Still a lot of folks piling into some of these names. Slack Technologies, Work, another one that I currently own. Stock is definitely gearing up for a big number in its earnings report coming up on Thursday after the close. Stock was down at near $30 middle of last week. Now it's 37 and change, making a big run. Volume picking up looks good. MDB, as I mentioned, this is MongoDB. Look at this huge run to the upside. This is another one that certainly would qualify as one of the best stocks in the software space. And all you have to do is just pull up a relative chart and you'll see what I'm talking about. Here is the stock relative to software. Here is software relative to the S&P 500. So you got one of the best groups, and then you've got one of the best stocks within one of the best groups. So that's a great way to trade the market. And you can see that this has been quite a winner for anybody who has been following relative strength in that software space. The last one I wanted to mention is Ciena. Ciena reports on Thursday as well. This is a telecom equipment company. Based on everything I can see, I think the market is going to expect a big number. Volume hasn't been as big on this one as we've seen on some of the others, but the price action, the relative strength, versus its peers versus the S&P 500. It's hard to argue with any of that. So I think Sienna is poised to perform well. All right, let's move on to the final area here, or the final segment. This is 3 you must see. And like I said, these may not be names that you're familiar with or that you follow closely, but I think they're worth checking out. So let's pull up the first one, which is OSPN, OneSpan. This is a company, I showed earlier with Turning Point, companies that were getting up and failing at resistance. Well, we actually made the breakout on OSPN, clearing that January high. We had gotten up close earlier in May, and then really last week, we tried to get through 20.5, couldn't do it 3 days in a row. And then Monday, we made the breakout. Volume stronger than normal. I like this close up here near 21. PPO looks good. Could we pull back to the 20-day? Yeah, I'd say that's the outside chance to the downside. I'd be a buyer on that pullback. I think OSPN goes higher. Next up, ATHM. And I wanted to mention this one because I talked about it in my Trading Places live show over at Earnings Beats on Monday morning. They reported earnings. And the one thing I said was it was in a trading range. And so 72.50, I liked it as a buy. 82.50 would be the sell. Off of it down, or excuse me, we had downtrended, but then we started uptrending, went sideways for a while. I think ultimately this stock breaks out above 82.5, 83, and that would be a very bullish development. But notice today, 72.50 was support. It got down to 72.38 and rebounded almost $5 into the close on pretty good volume. So ATHM, I think, looks really strong, and this is definitely a stock that I would be interested in, especially, again, if it were to pull back and get anywhere close to that price support area around 72.5. I think that would be interesting. All right, the last one I have for you today is AVCO. This is Avalon Globo Care Corp. And you might look at this and say, well, what do you like here? You can see mostly just downtrending. We could probably connect a downtrend line here at the tops. Tell you, the thing that really gets me here that I like is the increase in volume as we were making this move up from about $1.20 to $2.20. Lots of volume on the move up to the upside. Downside, and especially here in recent days, volume has been coming out of the stock. And this area right around 155, 160, I think is pretty good support. You got the 50-day moving average sitting at 154. You've got recent lows. If we use this inspector button, we can see exactly where the lows were. The low back at the beginning of May was 152. Then we get a little bit further into May. The low was 152. The low on Friday was 156. On Monday, we had a low of 156 as well, and closed right near that 160 level, actually at 161. So, if you've got resistance up at 220 or close to 220 and you're down near support, I kind of like it. The other thing that's important here is we had higher close, lower PPO. So what I look for is a 50-period test and reset that center line, or the PPO on the center line. And we've just about done both of those. So I think AVCO looks pretty good, and that's going to be your final of the 3 you must see. Once again, go over to earningsbeats.com. Love to have you sign up for that free Earnings Beats Digest. Everybody have a great day. Be back on Wednesday at Earnings Beats. Happy trading.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.